Tokyo, Reuters, Asian stocks dropped on Thursday as the latest escalation in the Sino-U.S. trade war hit Chinese shares, while global bond markets were rattled by increased borrowing by Washington and Japan. A Euro trademark's new tolerance for higher yields. MSCI's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 plus dropped 0.8%, dragged down by a 1.2% fall in Chinese H shares. MICN 00000 plus. Japan's Nikkei. N225 declined 0.4%. The CSI 300 index. CSI 300 of China's A shares dropped 1.4% to 3-week lows, extending falls from a July 24 high to 5.5%. The U.S. administration on Wednesday increased pressure on China for trade concessions by proposing a higher 25% tariff on $200 billion worth of Chinese imports. Or if it had not been for the sideswipe on trade, markets would have been in much better shape this week. Euro trademark's earnings were super, helping to quell concerns about high-tech companies. Euro said Hirokazu Kabeya, chief global strategist at Daiwa Securities. Euro trademark's policy tweaks weren't a Euro trademark much of a tightening, and did little damage. He added. Missy Euro trademark's gauge of stocks across the globe. MIWD 00000 plus is down 0.45% so far this week, reversing gains from the previous 4 weeks, with Chinese shares accounting for the bulk of that. On Wall Street, the S&P 500. SPX lost 0.10% on Wednesday, but the Nasdaq Composite. IXIC added 0.46% to extend its recovery from Monday's 3-week low. While industrial stocks. SPLRC fell 1.3% on trade worries, technology shares. SPLRCT were boosted by strong earnings from Apple, AAPLO. The World Euro trademark's largest company by market capitalization rose 5.9%, boosting its value to close to $1 trillion. The Federal Reserve kept interest rates unchanged on Wednesday, as expected, characterizing the U.S. economy as strong and staying on track to increase borrowing costs in September and likely again in December. While that surprised nobody, U.S. bond yields rose, with the benchmark 10-year yields breaking above 3% to 2-1/2-month highs, after the U.S. Treasury said it would boost borrowing in the bond market in the coming quarter. Loosening grip. Global bond markets were also rattled by sharp rises in Japanese bond yields since the Bank of Japan loosened its grip on long-term yields on Tuesday. The 10-year Japanese government bond yield rose to a 1-1/2-year high of 0.145%. JP10YTN equals JBTC on Thursday. Worries that higher yields in Japan may prompt Japanese investors to repatriate funds hit European bonds, boosting German DE10YT equals TWEB and French FR10YT equals TWEB yields to 7-week highs on Wednesday. In the foreign exchange market, major currencies were little moved. The euro changed hands at $1.1661 EUR equals, while the yen stood at 111.67 yen to the dollar. JPY equals. The British pound was steady at $1.3119 GBP equals D3 ahead of an expected rate hike by the Bank of England later in the day. Oil prices climbed a tad after 2 days of heavy losses on a surprise increase in U.S. crude stockpiles. Brent crude futures LCOC1 rose 0.5% to $72.78 per barrel after a 2.5% fall the previous day. U.S. West Texas Intermediate, WTI, crude futures CLC1 edged up 0.4% to $67.96 a barrel after Wednesday. A Euro trademark's 1.6% fall.